Hey everybody, Brian Kennedy, BKC Mortgage. Just want to be your educator in chief especially when we have really good news. Today is one of those days. The CPI, Consumer Price Index, which I've been saying for the last 2 to 3 months, watch the inflation rate, and when the inflation rate, which the CPI, Consumer Price Index, measures, when that inflation rate starts ticking down. I do think it's temporary, but today we took a huge turn on two things. The stock market went through the roof. Don't necessarily, that's good news. Mortgage rates are the target, and mortgage rates dropped. The 10-year Treasury bond went from 4.25 range to 3.9, and that is in one day. So take the good news, run with it. All we have to do is tame this inflation, and 2023 is going to be a balanced home buying market as soon as we get the inventory increase. But the mortgage rate information with the Consumer Price Index is just a quick summary as to what happened today. Headline news is the annual 8.2 CPI rate went from 8.2 to 7.7. So it's kind of a tipping point for mortgage rates to reflect in a positive way. And the core inflation rate, which if you want more information as to the difference between the two, call me or I can send you the information, but went from 6.6% to 6.3 month over month. And that is huge news for rates. So with that said, I do believe rates or inflation is going to taper and stabilize right here, because we are going into a holiday season. So don't let it fool you. People spend money during a holiday season, whether they have it or not. Two things to watch. Unemployment rate is increasing, as we've been talking about, and credit card balances are going up. So all that free money the government put out there back in COVID and over the last 24 months or so is changing. The landscape is changing. That money is running out. People are running up their credit cards, and we're going to slowly see this economy really slow. And in addition to that, when the economy slows and we officially drop into a recession, historically rates come down. So my message here is to get out in front of your buyers and get the information in front of them. The crazy thing I wanted to share, which I just like this data, is lodging away from home was at the highest rate since I think early 2002. Lodging away from home is when people are traveling a lot, and that was holding up the CPI number because the lodging away from home carried a 4.99% in October, which is very high due to people traveling. Which, when that starts coming down after the holiday season, you're going to see these inflation rates and these CPI rates come down with it. And that is going to be a game changer in interest rates. So I'm trying to get this information out in front of you so you can educate your buyers. Number two, this is really good information for first-time home buyers. That section of the market that has been leveled over the last 2 to 3 years. First-time home buyers, the incentives for first-time home buyers, which I've been talking about, will come. We are able to offer, not every bank can, which basically are for first-time home buyers, which the definition of a first-time home buyer is basically somebody that hasn't owned a home in the last 3 years. A co-borrower can go on that loan with them and own a home in the last 3 years. As long as the primary home buyer has not owned a home in the last 3 years, they're considered a first-time home buyer. For your information, the area median income incentives that basically are in place for Maricopa County, at 100% of the area median income, it's $88,800. So anybody under that level are going to get price adjustments that are normally very high for a 3% down payment for a first-time home buyer. That's why they're very deceiving, and also a low FICO score. Those price adjustments are going away for first-time home buyers. This makes things more affordable for first-time home buyers. Be the person that educates them about that. It even gets better. As their annual or area median income lowers to say 80% of the AMI rate, which is 71,000 and change, you basically get reduced MI, a free $1,250 grant that you do not have to, they do not have to pay back, along with the pricing adjustments. So we're saying we can drop rate potentially, or we can save them thousands of dollars to buy a home right now based on their median income of their household, based on these incentives that I'm explaining to you right now for first-time home buyers only. And then the 50 percentile of the area median income in Maricopa County, which is 44,400, they get a $2,500 grant, which is free money in addition to the LLPAs, which are basically canceled, which are the pricing adjustments for a low down payment and low FICO. This makes things more affordable for first-time home buyers. So get the information out. I really want to be the educator in chief for your borrowers and buyers. It's been a real tough ride over the last 6 months, and we want to make sure that we're educating you on changes on a daily basis or weekly basis as they come. Have a wonderful day, and I will talk to you all soon.